All right then, welcome back and happy new year. It's fucking 2026, mush. Can't you believe it? Right, so it's currently Sunday and we're gonna get over Friday's movements in the markets. I marked up quite a few trades and I didn't take any, but ultimately the actual price action we saw on Friday was fairly nice. Like we'll look at the news quickly. There wasn't any red folder. Um, But, just being the first day of the year, everything just sold off pretty much. You can see a big drop in the S&P, big drop in the Nasdaq, and then a recovery. Um, same for no, big drop on the Dow, then a recovery. Same with the Nasdaq, massive drop. Gold, sort of. I wasn't really looking too much at gold to be fair, but I just did quite a lot of tape reading on Friday, so we're gonna get into what I was looking at and why I didn't take a trade. Um, so where should we start? Where should we start? Let's start in the S&P. I'm gonna go onto the daily chart, and we had previous weekly opening gap. I think no, we had an opening gap from 2 weeks ago that we traded into with the candle, and then fully wicked that, closed it. So in terms of what I was looking for, I was looking more for my model. I was eyeing up, I was just testing out the 815 New York entry model that I had been back testing on my channel just to see if it would play out. Well, I didn't really have much intention of taking it, but in terms of what I was looking for there, on the S&P, we'll start with like the early time frames first, and then we'll go into like the bigger moves. So yeah, we had middle of the daily range, 8:15 candle, 8 o'clock candle here, mark that out, go into the 5 minute. Entry would have been perfect on here. So at 9:30, that would have tapped that and gone straight to TP for 3 to 1. And then after the retracement, it would have been swept out and then continued further down. Um, so even if I was to take that, it wouldn't be part of the model because it would have been at the 9:30 open rather than waiting for the first few 5 minute candles. Um, but yeah, it's just interesting to note that went straight from the 9:30 open after, if you're on the 15 minute here, we see price trading away from it, giving away its initial move, quick retracement and down, done. That would have been one done for the day. For reference on this trade, I was looking at risking, if I was to take it, maybe 30, no, 35. Yeah, something like that. So yeah, that was trade one. And then trade two was I looking at. We had the same on the Dow. So I've noticed that this 815 candle model does seem to work a bit nicer on the Dow. For whatever reason, it just seems to work. However, if we're going purely off entry criteria, so we got the 8 to 8:15, 15 minute candle there. The retracement doesn't quite hit the midpoint, and it moves off of this and then trades back up, tapping. I'll just use like this, the lines here because it's getting in the way. Tap in the box, and then continuation down to another 2.99 to 1. So that's two trades that would have played out on the same day, which is nice to see. And then coming into, the model that I'm looking at, my main model, the previous daily high, the previous daily low model, inverse fair value gap, breaker structure, fair value gap retracement, trade to the opposite liquidity that I've been banging on about for the last few months. Played out almost pretty much textbook, but due to SMT, I was uncertain and decided not to take this. So let's break this down as I finish off my coffee here. So what have we got? Let's go on the hourly. We have a sweep of a high here. We then trade down, create the previous daily low. Big move up on New Year's Day when the markets are pretty much slow. And then London session today, we manipulate up. So I was thinking, maybe we see a continuation further upwards, but at the same time, with those other trades marked out that I mentioned, I was bearish on those. So I was just waiting to see what was going on. We also had this, I think it was a 4-hour gap. Was it? We had this gap down here, which you can see from Wednesday, 31st of December. That's already acting as a draw, especially since we got relatively minimal drawdown since that gap. Price often needs to rebalance. You can see there's a lot more chop going into the build up towards the AM session. And then what fair value gap was it? We saw the 5-minute fair value gap created above the previous daily high after sweeping the London high and that high that I mentioned before. And then a beautiful breakdown here. So we've got breaker structure. Initially, I was a bit uncertain as to where I would want to see a retracement. Particularly as the model implies that I put my stop above the inverse fair value gap. So I was maybe expecting price to come back up here into this sort of zone, but I wasn't completely sure because it did move down quite a lot. And then if we look at the S&P, so from here, price pretty much just went straight from 10 o'clock to 10:20 to previous daily low. And for that reason, it kind of threw me off. I was like, well, it's now taken previous daily low on the correlating chart, on the correlating market. Perhaps this reduces probability this continues. But I did have another thought in my mind, like, maybe the NASDAQ is just lagging behind a little bit and we can see further downward movement. So for mainly that reason, I hesitated a bit and decided to stay out. I drew this up first, pretty much on the S&P, because we got the 5-minute inverse here, with the break here, and then trade up into the fair value gap above the break. However, at this time, I was thinking maybe it's just continuation. We see price reverse off this. Price, fail at this level and continue further down. So this was just something that I marked up with the stop below the inverse. It looked on paper a bit more like my model, whereas this, hadn't quite got there yet. So in hindsight, this would have been a lovely, lovely play. As you can see, I would have put the stop just above the fair value gap because if I was wrong, then I wanted to be wrong quick. And for this trade, I was looking at risking about 140. It's about 117 to 137. So whatever it would have been at the time, more likely. Oh no, this was sorry. This was the sizing I was eyeing up. 1.5% risk, £97 stop, 600 TP. And as you can see, uncertainty as to no entry came from US 500 already taken previous daily low. Wasn't sure if a reversal was happening or a continuation based off the higher time frame down trend. And pretty much what happened was I hesitated, and it just ended up costing me the trade. I hesitated, I wasn't sure, and I was pretty much just moving the entry down. If we go into like the lower time frames here, scoot this across. Yeah, so I was watching like this, like move away from me and like where the stop was going to be, and yeah, I mean, we hit the higher time frame point of interest. You can see a nice reaction off that into the fair value gap. So we got the model repeating itself on the lower time frame. So we had the not breaker structure, but continuation down, the fair value gap here, trade up into that, further down to target. So even this trade here with the stop above this fair value gap would have been another 3 to 1. Um, so the way I've journaled it here is, adding to position, active risk management, scalp style based on what price was showing me. So the initial entry would have been at break even, maybe trailing at this point, based on how I would have liked to trade it if I was in it. And then for this one, we just let it run to previous daily low since it hadn't been taken. I'm full of cold at the moment, so apologies if I'm coughing and clearing my throat every 5 minutes. But yeah, that was pretty much Friday, and ultimately, if price action is going to continue to move like this month, then we could be in for a good month. Obviously, I don't want to jinx anything yet. I don't want to say anything too early. But yeah, the fact that we had what, 4 possible winners alone on Friday, is a good sign. But at the same time, I didn't take any of them, so it's kind of like a balance in my head at the moment. It's like, well, I've hesitated to take the trades, and that's cost me, it's hypothetically, say if I take every trade that I marked out there, including that loser on the S&P, that's about about £900 to £1,000, including the loss. So it's one of those, isn't it? It's like, yeah, I missed a bunch of trades and I didn't take them, but I was also being cautious for the fact that it was the first trading day of the year. I didn't really know what to expect going into it. Last year, I'm not going to go all the way back to last year on the charts, but I'm sure I had the same mindset. Like, I didn't really want to trade the first day of the year. Obviously, it's the 2nd of January, but being that 1st of January is a bank holiday. So just exercising caution, but ultimately I did miss out as a result of it. And, maybe perhaps a bit more risk might have been a smarter move. Getting confused with all these charts I'm looking at because I've not got the drawings on them. And yeah, ultimately, I think I've got a good feeling for this year. We now have a year of experience in live markets. The way I was looking at it was, if we've got like a higher time frame move on where, like I was just describing, we have the full model playing out. Put that on a 5 minute like this, then yeah, fine, we'll take it. But if price is a bit more, ranging movement rather than in an expansion model, then we can look to implement this 815 trade, just because I feel like it's quite simple. And yeah, I know the back testing that I did the other night wasn't the greatest results on it, but that was the session where I was trading it at like 3, 4 in the morning. So it was just more like taking every trade that came up, like every session, just to see what was going on, rather than exercising discretion in the decisions I was making. So I think in a live market, this could pay off. Obviously, I'll try to stick to my main model, as you see here, more often. But, can't complain. We are currently flat for 2026, no trades so far. And also, just whilst I'm thinking about it, we had this hourly imbalance here completely filled at the end of that move. on the Nasdaq, get the sweep, bodies closed perfectly, and the push upwards. So very, very nice stuff to see. Bitcoin is let's have a look on a weekly chart. It's kind of in a recovery zone at the moment. Either it drops a lot or we just see it push. Not really paying too much attention to it, if I'm being honest. I have my holdings, and that is it. Also for gold on Friday, we saw a big drop during the market open after the rally. I think people are getting a bit more cautious, especially with like SLV, especially with silver being this high at the moment. So that's gone, I think, previous market close. It's sitting around 67. It was up here. Oh dear. It's sitting up at 70 and then has dropped a little bit. So we've got a bit of a sell off on silver. But, you know, we also got to think of current fundamentals as well. Oil with the US invasion, not US invasion, but like US capturing the Venezuelan president for pretty much oil purposes. You know, that country's got one of the largest gold and oil reserves in the world. So the macroeconomic or the geopolitical impact that could have on the markets going forward over the next few weeks, next few months, maybe the next couple of years, it can't really be ignored. So we'll be keeping an eye on that as well. But overall, I think that's going to just about do it for me today. If you traded on Friday and you got a nice win, good for you. Happy days. If you took a loss on Friday, then don't worry about it. As long as you're managing your risk, then you'll be absolutely fine. And it's the first trading day of the year. So we've got 364 days, well, since that trading day, 363 days because it was the second. So yeah, don't really know what I'm getting out there. Just pace yourself. Don't worry about it. And yeah, hopefully 2026 is a good one. Hope you all had a great new year. And before we sign off, what have we got for news on tomorrow? ISM manufacturing, red folder at 10 a.m. New York. Nothing on Tuesday. Wednesday, bit more PMI, job openings, unemployment as usual, and NFP on Friday. So not too bad of a week. I think we could see some nice stuff. There's not too many not too many red folder news items there. So with all that being said, I will catch you with tomorrow's review. Have a good one.